Good morning, ladies and gentlemen, and welcome to the show on this Wednesday, the 16th of June, 2021. Thank you for tuning in. Listen, I'm glad to have you guys here. I found a chart on Zero Hedge, and I want to show it to you guys. So let's get started. Let's open up the charts right here. And, I've been talking about this for a while. But this is the best illustration I can find. I kind of illustrated it to a tightrope walker. If he fell off to the right, he would be going into inflation, and if he fell off the tightrope to the left, he'd be going into deflation. But this illustrates it even better. The bubble on the bottom there, on where it says unstable equilibrium, that's the bubble economy that we have, and the fact that everything has been over leveraged or inflated, and that's exactly what it does. It creates an unstable equilibrium where the ball wants to roll off of the bigger ball, to the left or to the right, inflation or deflation. And the pressure in this everything bubble now has got to the point where it's created a tremendous unstable equilibrium. It wants to spring in either direction, into deflation or inflation. Not just roll off. It wants to go like an elastic band's pulling it. What we should have in an economy that's running properly is a stable equilibrium, where that's what we had back in the 70s when they got the huge inflation. And they were able to raise interest rates up to like massively high, like almost 20% during the Paul Volcker era. Now, they can't even budge these interest rates. They can't even normalize them, which would be probably around 5% on the U.S. 10-year, the normalized rate, so that people get a interest on their money. Would you believe that over in Greece right now, their bonds are going to go negative? Would you buy a negative yielding Greece bond from Greece? This has got beyond ridiculous now at this point, the fact of these negative rates and these negative yielding bonds. When the rate of inflation is just jumping and climbing like crazy in the United States, and the U.S. 10-year is only at like 1.4 something percent per year, it's a guaranteed to lose you money. Let's get in there and take a look at these markets today, and let's take a look at the silver price right now. And what we're seeing is $27.75. It's only up 9 cents on the day. They're staying range bound for the longest time now, gold and silver. If they lose control of gold and silver, and they shoot too high to the upside, it could be game over for the world financial system. Honest to goodness. Now they got Basel III coming in. What effect is that going to have? It's only a few days away. Well, we're going to have to wait and see. But I can't see it if they pass it. I can't see it having a negative effect upon gold and silver. We're going to have to wait and see what it does to the price, Don't forget about Basel III. It's coming in. Okay, I believe it. I think that they're going to at least push through parts of the legislation and allow it to function to a certain degree. I don't think that. I think the time the time for gold and silver might be very, very close. I think even if Basel III doesn't go through or whatever, I still think the time for gold and silver is very close, especially silver, because the amount they have in the physical markets is very, very tight. When's it going to break open? I'm not exactly sure, but you guys, I'm telling you, we're getting awful close, I think, to it. Silver's a thing to have, I'm telling you guys, it's really, really something. Okay, you have to do a little bit of research to find out why I'm saying that. Look into the fundamentals of it. Okay, let's take a look at the cryptocurrencies now. They've lost a little bit. They've lost their edge a little bit right now. Bitcoin is down to 39,127. It was up to $64,000 for Bitcoin. Now it's 39.90, 126. They seem to be going along right here, and they're going to either move to the down or move to the up, and I'm not exactly sure which way they're going to go. But I got a bad signal from Bitcoin recently. I found that it's stabilized in price more than the altcoins. The altcoins have been losing value at times. That indicates nervousness into the market when you see the Bitcoin stabilizing and the altcoins losing. Well, you can see the green marker at the end here for Bitcoin right here, and the altcoins are most all of them are in the red. But it's a little bit of a bad signal. But anyway, listen, let's take a look now at the Dow Jones. Down 41 points on the day so far, 34,257. We'll see if it will recover by the end of the day. Let's take a look now at crude oil. 72.43. It's down 0.43% on crude oil. Well, it's just like I told you guys. When it hits 70, it's going to be on its way to 80. Oh, more gas consumption's starting to happen. Well, that's a no-brainer because, you know, people are starting to get out now and starting to drive and stuff again, you know, and they're going to be using more gasoline. So more refineries are going to have to kick up production, you know, and that's going to require more crude oil. And so the crude oil price is just going up a little bit. Let's take a look at the MOVE index now. And the MOVE index is leveled back off again, starting to fall. Down 9% today, 5.567 points. Now let's take a look at bonds and rates and see what they're doing on the day. We're looking at falling yields, a half of a basis point on the US 10-year as at 1.49. But we're looking at over a basis point on the US 30-year. The US 30-year is at 2.16, and it's got 1.3 basis point fall in yield on the US 30-year. Now let's take a look at the US dollar index and see what it's going, and it's flat today. It's going along sideways at 90.51. So the dollar's been holding pretty stable lately, guys. A lot of dollar strength. Well, remember that chart I showed you at the start? The ball's up at the top and it could fall off on deflation or inflation. Right now it's falling toward deflation. It started to tip down on that side, you know, but any maneuver by the Fed to try to tighten, and they could flip this back into deflation so quick it would make your eyes spin. And then at that point, it would start to fall off that hill faster and faster. They would have to catch the ball. They wouldn't be able to let deflation take its full course, because what would happen is deflation would completely freeze the economy. It would destroy the economy if they let it go too far, so they can't. So then what they would have to do is catch the ball and put it back up on the top. Once they put it back up on the top, then it's going to start to roll off into inflation again, even faster. Because then everybody can see that they're not going to stop this. They're going to keep pumping the money out there as much as it takes to keep the ball up and keep the bubbles, keep them inflated. This is a bubble economy we got. It's all run off of central bank printing. They have to keep it going or it will completely deflate. So that's where we're headed. We're headed toward inflation ultimately. These games might play out where it starts to deflate a little bit, but then they'll pump it back up again. And then it'll move faster into inflation. Ultimately, in the end, this is going to yield inflation. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.